Welcome to this new video, Building Wealth Through Real Estate, Strategies for Property Investors. Today, we embark on a journey to explore the fascinating and potentially lucrative world of real estate investment. Whether you're an experienced investor looking to diversify your portfolio, a novice dipping your toes into the property market for the first time, or simply an interested individual eager to learn more about this compelling field, there's something in store for you. We'll be unveiling strategies that seasoned investors employ to build their wealth and create a steady stream of income. From buying and holding properties, flipping houses for profit, to investing in rental properties, we'll uncover the secrets that make these strategies tick. In this rapidly evolving market, understanding how to capitalize on opportunities is key. So, grab your notepads, keep an open mind, and buckle up. Stay tuned as we delve into the lucrative world of property investment. Property investment, in essence, involves purchasing real estate with the intention of generating income. But what does that really mean? Well, let's delve a little deeper. Real estate investment is a broad term that encompasses various types of properties. Residential real estate, for instance, includes houses, apartments, townhouses, and vacation homes. Commercial real estate, on the other hand, covers office buildings, retail spaces, and shopping centers. Then we have industrial real estate, which encompasses warehouses, factories, and distribution centers. Not to mention, there are also special-purpose properties like car parks, schools, and hospitals. Each of these types of real estate offers unique opportunities for investment. For instance, investing in residential real estate might involve purchasing a home to rent out, while commercial real estate might involve buying a shopping center to lease units to businesses. The beauty of real estate investment is that it provides multiple avenues to generate income. One of the most common ways is through rental income. As a property owner, you can lease your property to tenants who in turn pay you rent. This can provide a steady stream of income that could potentially cover the costs of your mortgage and other expenses, and even provide a profit. Another way to earn money from real estate is through property appreciation. This is when the value of your property increases over time due to factors like improvements in the property, changes in the real estate market, or developments in the area. If you sell the property when its value has increased, you can make a profit. But it's not all sunshine and roses. Real estate investment also comes with its fair share of risks and challenges, which we'll delve into later in this video. For now, it's crucial to remember that while real estate can be a lucrative investment, it requires careful planning, research, and management. Armed with this basic understanding, we can now explore various strategies for property investment. The first strategy we'll discuss is the buy and hold approach. This strategy is all about playing the long game in the real estate market. It's a classic approach, one that's been used by investors for centuries, and it's just as effective today as it was back then. So, what exactly is the buy and hold strategy? Simply put, it involves purchasing a property and holding on to it for a significant period of time, allowing the property to appreciate in value before selling it for a profit. It's a strategy that requires patience and a keen understanding of the property market. Let's dive a little deeper. The buy and hold strategy works on the principle of capital appreciation. This is the increase in the value of an asset over time due to various factors such as inflation, demand, and improvements to the property or the surrounding area. Essentially, you're banking on the fact that the property you're investing in will be worth more in the future than it is today. The key to a successful buy and hold strategy is choosing the right property. You'll want to find a property that is likely to appreciate in value over time. This could be because it's in a desirable location, it has potential for improvements, or the local property market is on an upward trend. It's not about finding the cheapest property, but rather finding the property that will give you the best return on your investment. Once you've purchased your property, the hold part of the strategy comes into play. This is where your patience is tested. Property appreciation isn't something that happens overnight. It can take years, even decades, for a property to significantly increase in value. But if you've chosen well, the wait can be well worth it. During this holding period, it's essential to keep the property in good condition. Regular maintenance and improvements not only keep the property habitable, but can also add to its value. Additionally, renting out the property can provide a steady income stream while you wait for the property to appreciate. It's important to note that while the buy and hold strategy has the potential for substantial profits, it's not without risks. The property market can be unpredictable, and there's no guarantee that a property will appreciate as expected. That's why it's crucial to do your research and consult with real estate professionals before making an investment. In conclusion, the buy and hold strategy is an effective way to build wealth through real estate investment. It requires a careful selection of property, patience during the holding period, and an understanding of the property market. It's a long-term investment plan, and while it may take time to see the fruits of your labor, the potential payoff can be substantial. The buy and hold strategy is a long-term investment plan that requires patience and market acumen. Another popular strategy in the real estate world is house flipping. It's a term that gets thrown around quite often, especially on your favorite reality TV shows. But what exactly is it? Well, house flipping is essentially the process of buying a property, often one that's a bit worse for wear, then renovating it, and finally selling it swiftly for a profit. Now, the key to successful house flipping is finding a property with potential. It's not about just buying any old property, slapping on a coat of paint and expecting to make a killing. It's about finding a diamond in the rough, a property that, with a little bit of elbow grease and a well-thought-out renovation plan, could shine brightly in the property market. The next step is the renovation itself, and this is where your creativity and practical skills come into play. It's all about enhancing the property's value without breaking the bank. Simple improvements like a fresh paint job, modern lighting fixtures, or a revamped kitchen can significantly increase a property's appeal to potential buyers. However, it's not all sunshine and rainbows. House flipping comes with its share of risks, and it's essential to be aware of them. First and foremost, the renovation costs can quickly spiral out of control if not managed carefully. Unforeseen issues like structural problems or plumbing disasters can turn a promising project into a money pit. Another risk is the potential for a slow or stagnant property market. If you're unable to sell the renovated house quickly, you could end up holding onto it for longer than expected, which can eat into your profits. There's also the risk of overcapitalizing. This happens when you spend more on the renovations than what the property is actually worth in the market. Always remember, your goal is to make a profit, so it's crucial to keep a close eye on your renovation budget and the potential resale value of the property. Despite these risks, house flipping can be incredibly profitable if done right. It's a strategy that requires a keen understanding of the property market, a good eye for potential, and the ability to manage a renovation project effectively. But perhaps the most important thing is to always be prepared and have a plan B. Even the most experienced house flippers can face unexpected challenges. So it's always wise to have a backup plan, whether that's renting out the property or having additional funds set aside for unforeseen expenses. So, is house flipping for you? Well, that depends on your appetite for risk, your skills, and your knowledge of the property market. But one thing's for sure, it's a strategy that can potentially turn a tidy profit if you're willing to put in the time, effort, and, of course, the investment. House flipping can be profitable, but it's not without risks, and it requires a keen understanding of the property market. Our third strategy revolves around rental properties. Rental properties, which are essentially buying properties to lease them out, provide a steady stream of income. This strategy is particularly appealing if you're looking for a consistent paycheck without the volatility of the stock market or other investment vehicles. But, as with any investment, it's not as simple as it seems. There are several key factors to consider: location, tenant selection, and property management. Let's begin with location. Location is the golden rule in real estate, and it's no different when it comes to rental properties. The location of your property will determine the rental rates you can charge, the kind of tenants you attract, and the vacancy rates you'll experience. A property in a desirable neighborhood or near amenities like schools, parks, and shopping centers will always be in high demand. So, when investing in rental properties, always remember: location, location, location. Next, we move on to tenant selection. This is where your people skills come into play. A good tenant can make your life as a landlord a breeze, while a bad tenant can turn it into a nightmare. You'll want to thoroughly vet your potential tenants, checking their credit history, employment status, and references. Remember, it's not just about filling your property. It's about finding the right person or family who will respect and care for your property as if it were their own. Lastly, let's talk about property management. Owning a rental property is more than just collecting rent checks. There's maintenance, repairs, dealing with tenant issues, and ensuring compliance with local housing laws and regulations. Some investors choose to manage their properties themselves, while others hire a property management company. The decision depends on your personal preference, time availability, and expertise in property management. Now, it's worth noting that rental properties aren't a get-rich-quick scheme. It's a long-term investment that requires patience, dedication, and a good dose of business acumen. But when done right, it can provide a steady and reliable income stream, often with tax advantages. Of course, with any investment, there are risks. Rental properties come with their own set of challenges: unexpected maintenance costs, unoccupied periods, or problematic tenants. But with careful planning, due diligence, and a well-established strategy, these risks can be mitigated. So, there you have it, the world of rental properties in a nutshell. It's a strategy that requires work, but the potential rewards can be substantial. If you're someone who enjoys the tangible aspect of real estate, the idea of a steady income stream and the challenge of managing a business, then rental properties might just be your ticket to building wealth through real estate. Rental properties can provide a steady income stream, but they also require ongoing management and maintenance. Now that we've discussed various strategies, let's talk about how to finance your property investment. Investing in real estate might seem like a daunting venture, especially when you consider the financial aspect. But fear not. There are several ways to finance your property investment, each with its unique advantages. Firstly, savings. This is the most straightforward method of financing. You've worked hard, stacked up a nest egg, and now you're ready to put it to work. The beauty of using savings is the absence of interest payments and the freedom from debt. But remember, investing all your savings in one venture can be risky, so consider diversifying your investment portfolio. Next, loans. A conventional mortgage is the most common type of loan for property investors. Banks or other lending institutions provide the funds, and in return, you agree to pay back the loan with interest over a set period. The property itself serves as collateral. To qualify for a loan, you'll need a good credit score, stable income, and a satisfactory debt-to-income ratio. It's a great option if you have a reliable income stream to cover the repayments. Another way to finance your property investment is through partnerships. Maybe you have a friend, family member, or business associate who's also interested in real estate investing. Pooling resources can significantly lower the individual financial burden and risk. It's important, though, to have a clear agreement outlining responsibilities, profit sharing, and exit strategies to prevent any potential disputes. For those of you who'd prefer to avoid the complexities of direct property ownership, you might consider real estate investment trusts, or REITs. These are companies that own, operate, or finance income-generating real estate. By purchasing shares in a REIT, you can indirectly invest in real estate and receive dividends. It's a good way to get a taste of the real estate market without the need for a large amount of capital or the responsibility of managing a property. Lastly, private lending or hard money loans can be an option. These are short-term, high-interest loans from private investors. They're typically used for buying and renovating properties before quickly selling them for profit. While the interest rates are high, these loans can be obtained quickly and with less stringent requirements than conventional loans. The method of financing you choose largely depends on your financial situation, risk tolerance, and investment goals. It's essential to do your homework, compare the pros and cons, and possibly seek advice from financial advisors to make an informed decision. Securing adequate financing is crucial to successful property investment. With the right planning and strategy, you can transform your financial dreams into reality. Remember, the journey of 1,000 miles begins with a single step, so step into the world of real estate investing and let your money work for you. Like any investment, real estate comes with its share of risks. While real estate has a reputation for being a reliable, long-term investment, it's not without potential pitfalls. The risks can be high, but with careful planning, they can be managed and mitigated. Let's delve into some of these potential risks and discuss strategies to navigate them. Firstly, market fluctuations pose a significant risk. Real estate markets can be volatile, and property values can swing dramatically. One minute you might be riding high on a soaring property market, and the next, you could be deep underwater on your investment. But remember, real estate is a long game. Market dips are often temporary, and with patience, you can weather these storms. To mitigate this risk, diversify your portfolio. Don't put all your eggs in one basket or one location. Investing in different types of properties in various locations can help cushion against market downturns. Secondly, there's the risk of property damage. Whether it's a natural disaster like a flood or a fire, or an issue like a leaky roof or a broken heating system, damage to your property can be costly. To protect yourself, always ensure you have comprehensive insurance coverage. Regular property inspections and maintenance can also help catch issues early before they become bigger, more expensive problems. Next, let's talk about problematic tenants. As a landlord, you may encounter tenants who don't pay rent on time or cause damage to the property. This can lead to financial strain and a lot of stress. To mitigate this risk, it's crucial to vet your tenants thoroughly. Conduct background checks, verify income, and check references. It's also important to build a good relationship with your tenants. Treat them with respect, respond to their concerns promptly, and foster open communication. Another risk factor is the potential for legal disputes. This can range from zoning issues to disputes with tenants or neighbors. To protect yourself, it's essential to have a good understanding of real estate laws and regulations. It's also beneficial to have a good attorney on your side who specializes in real estate law. Finally, there's the risk of financial strain. Owning and managing properties can be expensive, and unexpected costs can arise. To mitigate this risk, it's crucial to have a solid financial plan and a contingency fund. This will help you cover unexpected costs and keep your investment on track. Just like any business venture, real estate investing requires careful planning and risk management, but don't be discouraged. The rewards can far outweigh the risks. By understanding and preparing for these risks, you can make more informed investment decisions. Remember, every successful investor has faced and overcome these challenges. With knowledge, patience, and a well-thought-out strategy, you too can build wealth through real estate. As we draw to a close, let's summarize the key points we've covered in this video. First off, we dove into the very essence of real estate investment. We discovered that it's not just about purchasing properties, but rather, it's about generating wealth through strategic acquisitions, management, rental, or sale of real estate. It's a dynamic field that requires a keen understanding of the market, a calculated approach, and a dash of courage. We then embarked on exploring various investment strategies, starting with the buy and hold strategy. As a long-term investment plan, it involves acquiring properties and holding on to them until their value appreciates significantly. This strategy is a testament to the old adage, patience is a virtue. It's all about waiting for the opportune moment to sell and reap the rewards of your patience. Next up, we tackled the exciting world of house flipping. This strategy is a bit more hands-on and time-sensitive. It involves purchasing properties at a relatively low price, renovating or improving them to add value, and then selling them at a higher price. It's a fast-paced strategy that requires a keen eye for potential, a knack for renovation, and a good understanding of market trends. The third strategy we covered was rental properties. This approach involves buying properties and renting them out to generate a steady stream of income. It's a strategy that can provide a consistent return on investment over time, while also contributing to the property's appreciation. It's ideal for those who prefer a more stable, long-term investment. Then we delved into the realm of financing your investment. We discussed different options from traditional bank loans to more creative methods like seller financing or partnership arrangements. The key takeaway here is that there are multiple avenues to secure the necessary funds for your investment. It's essential to explore all your options and choose the one that best aligns with your financial situation and investment goals. Lastly, we touched on risks and mitigation. Investing in real estate, like any other form of investment, comes with its fair share of risks.